This is going to be my free trade update for April 2022, and you're going to be surprised with the results. Hi, I'm Mosh. I'm an amateur trader and investor. I've been using a variety of platforms so I can test out which one is the best and which one is the best for your money based on how you are as a person. So for example, Trading 212, I do a lot of my leverage trading on there. I use Saxo Bank for my options trading, and I use Freetrade for my dividend investing. I also use Invest Engine for my managed portfolio. That's where I do zero work and it's all done for me. And I see which one's the best, and I've done reviews on pretty much all those platforms. So definitely go check out those videos, and I'd appreciate a sub to the channel because any new updates, new videos, you'll get straight away. And if you enjoy this video or get something useful, give it a like. So my free trade portfolio, I've decided just to mainly stick to dividend investing. There is a couple of growth stocks and growth ETFs in there that I've just thrown in. So you can see the portfolio went from nothing up by £1,343. I did say in my previous videos, a lot of these are made of free shares, but what I've done, I've sold those free shares off and I've invested in high yield dividend stocks. Now, if you want your free share with either Trading 212 or Freetrade, or you can do it with both, all you have to do is use my link in the box below, open up an account, deposit £1, and you get that free share. Okay, so you can see this is what the portfolio is looking like. So I've got the FTSE All World Dividend High Yield. This has gone up, the value of the stocks, just over 9%. I've also been buying the S&P 500, but because I've been dollar cost averaging and we've had a couple of downturns recently, it's not up by much. It's £201, so it's just under a loss of 1%. The Global Clean Energy ETF, I'm a big fan of this, but it's not doing that well. But remember, the focus today is on the yield and the dividend, how much I've been paid by these companies. Telefonica is up 46%. I talked about this just over a year ago, and I said it's a fantastic stock to hold, especially with the yield that it's paying. Uber, a growth stock that is massively underperforming, but it's one that I'm going to keep on buying because I think the future is very, very good for Uber. I've got Aviva, which is a UK insurance company. Everyone knows about AT&T. It pays a good yield, and we'll look at what it actually is. ETP is a gas company. You can see that's up 48%. And this is recently a free share that I got, which I'm going to sell and probably buy the S&P 500 or potentially some more AT&T. Now, if we go to activity and go to the very first one, you can see in February, I got paid £1.08 from the S&P 500 as dividend, as passive income. The way to work out dividend yield is the dividend paid divided by the current share price times 100, and that's going to give you your percentage of dividend yield. A lot of these companies will pay quarterly, some do pay yearly, and we can work out roughly a good estimate of what the dividend is for the year. So you can see the total value of the S&P 500 is £201. They paid me £1.08. So if I do £1.08 divided by £201, that gives me a dividend of 0.53% for last quarter. So remember, quarter is every 3 months. Now, if we times that by 4, that would give us a good estimate of around 2.14% for an annual dividend, which is really good. It's better than what the banks are paying you. Anything above 1%, I think is good. So the next one is ETP. ETP is a gas company. And as you saw, it's up 48% the stock price. And we also got paid a dividend. So if I do 38 pence divided by £26, that's going to give me a quarterly dividend of 1.46%. And annually, that becomes 5.84%. So not only has it gone up 48%, I'm getting an annual dividend of 5.84%. Just bear in mind, this calculation isn't 100% accurate. It's just to give you guys an idea, because what I'm doing is I'm taking the current price of the stock and I'm using the dividend paid that was paid in February. So we're a month behind. Now, to work out accurately, what I should have really done is done the 38 pence of ETP divided by the share price that I bought it for. And that would give me a much more accurate result of the yield I'm getting, which will be a lot higher because my stock price has gone up 48%. The next one is AT&T, and it's a US company. They paid me 96 pence. Now just bear this in mind. This is after the US withdrawal tax. The withdrawal tax for the US is 30%. If you filled in the W8 Ben form, it reduces to 15%. So they've already taken tax off this. Now the current stock price of AT&T is £53. So 96 pence over £53. That gives me a quarterly dividend yield of 1.81%. And a good estimate for the year is around 7.2%, which is really good. And the stock is down about 2%. But I think that is such a good yield, and this is one that I may buy a lot more of. The next one, I got paid this in December 21, is the FTSE All World High Dividend Yield, and they paid me £3.01. It's by Vanguard, so I've got a total value of £395 in there. So if I do £3.01 divided by 393, for the quarter, that gives me 0.76%. For the year, that just gives me just over 3%, which is a really good dividend yield. And the stock price has gone up just over 9%. Okay, the next one we've got is Global Clean Energy ETF. They paid me 75 pence. And I've got a total holding of £197. So 75 pence over £197. That's going to give me a quarter yield of 0.3%, or a yearly estimate, this is, remember, of around 1.52%. And that is not bad for a ETF with a lot of growth stocks in it. If you got any questions about dividends, the stocks I own, or anything related to finance, drop a comment. I will always reply to sensible comments.